Mr. Aasif Malbari, the Chief Financial Officer, is joining us to talk to us about their earnings. Hi Aasif, good to be speaking with you. First up, the Q2 numbers have been in line with what the street is expecting, but at least much better than rest of the peers. Tell me, what did you manage to do differently that you managed to stand out, and what is the prospect of volumes going forward?
Given the market context, I think we delivered a good set of numbers on the top line. The India volume came in at a 7%. Our Indonesia business grew at a 7%. Overall, on a consolidated basis, we delivered a 5% UVG. And this was after significant downstocking, which we did in Africa. So we're quite happy with the shape of growth, which we could deliver in the current context.
So that was about volumes, but as if we were expecting some sort of pricing growth to kick in this quarter as well. Has that happened, or is it likely to happen in Q3 now?
We've started narrowing down the gap between the sales growth and the underlying volume growth. This quarter, we still had a negative 200 bips of price growth. But as we enter into Q3, we will get onto a positive price growth. So between Q3 and Q4, we're expecting price growth to kind of come in positively. We do expect around 3% plus pricing growth in second half.
And so, can we expect a double-digit volume growth at least by the end of FY25? Any visibility on that front?
Yeah, so I think, as I said, with the price growth coming back in the business, definitely we should be seeing a step up on the overall revenue growth as we get into second half. I'm quite confident that the growth will step up from where we are in the first half. So second half will definitely be stronger on the revenue growth compared to the first half.
Then, sir, can you give us some visibility on the volume growth for the end of this year? If you could share any number on that front. And do you aspire to see a high single-digit underlying volume growth in core markets at least?
Yeah, so we don't give a guidance in terms of a number, but I can say that our aspiration is to ensure that the key markets stay in a high single-digit underlying volume growth, and that's what we kind of aspire to deliver. Obviously, I've spoken to you about some geographies where we need to take actions to kind of downstock, like Africa, which we will do. But otherwise, in terms of core markets, we do definitely aspire to stay in the high single-digit underlying volume growth.
Sure, point taken. Talk to me about your latest acquisition as well, the Rayman Consumer Care Limited. How's that scaling up? In the contribution that's come from the books, are you happy with the performance?
No, so we're quite happy in the manner in which the Rayman Acquisition brands are doing. We are seeing a double-digit growth on the portfolio. We have been able to finish the synergy actions on the portfolio, and hence we've been able to improve the margins of the business. There has been a significant step up in the advertising behind these brands, and we're also happy with the growth. So it's been a good integration, and broadly the business has started now kind of growing almost 2x to the overall average India growth. So we're happy with the way it is shaping.
Okay. Asif, the other thing is we have been hearing from some of the peers that rural is still showing signs of picking up, but urban is actually slowing down. That's the commentary coming in from Nestle, HUL, etc. Is that something you are witnessing as well?
Yeah, so I think currently the rural demand is kind of strengthening, and there are mild, I would say, pressures building on in urban. Fortunately, there has been a bit of an offset between the two, but it's too early to call it out as a trend.
Okay, we have also been seeing some commodity inflation to be there in the market for quite a long time. Have you been able to pass on this to your consumers, and by when do you expect raw material prices to ease down?
See, there has been a very, very sharp increase in the palm oil prices over the last actually 6 months, and it's got compounded over the last 3 months. We normally do a staggered price increase because you also need to kind of wait for the prices to stabilize. So there could be some volatility in terms of prices moving up and down. So we'll read exactly where the prices settle down. And hence, our MRP increases will always lag the cost increases when they happen so sharply. This will put a bit of a pressure on the soap margins. We saw that in the current quarter. We do expect to see some kind of a margin pressure in the short term. But we've seen that in the long term, the margins always go back to the normative levels. And we've always not kind of compromised on taking very sharp increases in a very short period of time. So yes, there will be some kind of margin pressure on soaps, but it'll kind of even out as the kind of commodity prices settle down.
And lastly, sir, before we let you go, could you tell us what led to the sales value fall of around 10% when it comes to the US, Africa and Middle East segment? And also, how much of this impact was because of Naira devaluation, and what is the outlook when it comes to these markets?
So firstly, the interest cost in some of the geographies has significantly gone up. The cost is as high as 30% in some of the geographies. We needed to run an efficient business, and hence we've taken the hard decision of bringing down the trade inventories in various parts of our West Africa business. That has meant that the underlying volume growth has declined in this quarter, and you will see some more correction in the next quarter also, as we bring down the trade inventories to optimal levels where it should be, and run an efficient business there. But frankly, this is like a short-term impact, and it doesn't impact offtakes. We're doing very well in terms of market share in all the geographies in which we're operating in, and hence we're happy in which the shape of the business is shaping out too. If you see the numbers in terms of profitability for the GOM region over the last 3 quarters, we've significantly increased and improved the absolute profitability, and we've also taken the margins to now close to 14.5%. The historical margins for the last 5 years have been at 8.5%. So there's been a significant step up in profitability, both absolute and margin. So we're happy the way this business is shaping out, and the volumes will definitely come back given the fact that we are kind of gaining on market share.
Well, thank you, sir, for joining us and for giving us all those details and for putting things into perspective.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.